Welcome to Quartz Smart Investing. I'm Merrill Brown. Our guest today is Jason Trennert, Chairman and Chief Executive Officer of Strategas. Jason, thank you for joining us.
Thanks for having me.
Not long ago, we had people sitting in that very seat who were talking about a 5,000 S&P run over the rest of the year. We're now down a couple hundred points since those folks sat in that chair. What do you think?
My own opinion is that a lot of the issues that we were concerned about going into this year are still present. In particular, I think that inflation is going to remain sticky. I think the bond market is repricing itself, and people or equity investors are starting to have to get used to the fact that we're very unlikely to go back to the interest rate regime that we saw during the QE period. Also, I'd say profits, while they're better than expected, had been down 3 quarters in a row, and so multiples are still quite high. So it seems to me the risk reward is not particularly favorable.
And recession?
Recession, if you look at the standard indicators, we think the chances are about 3 and 4 over the next 18 months.
You once said that you like to do research for your work and talking to cab drivers and people on the street. You're still doing that, and what are you hearing from them?
Well, I travel about 80 days a year, and we have clients in 45 states, 25 countries, and so I think this is an art form, my own opinion, that has fallen by the wayside a little bit. It used to be more common because information wasn't as diffuse as it is. Having said that, I still think there's enormous value in just talking to people on the ground as an economist.
And what are you hearing from them?
And what we're hearing, inflation is, I think there was a member of the administration yesterday said that this discussion about inflation is getting a bit stale. And I can tell you, if you're talking to someone who's running a family, has kids, it's not stale. It is front and center, the thing that is of most concern to people. And it's not just gas prices at the pump. It's auto insurance, it's groceries, it's all down the line. And I think there's a lot of people, even relatively well-heeled people, that are looking at what they're paying and looking what they're earning and saying, my standard of living is declining.
And are those people inclined to avoid stocks at this point in time? What are they saying to you when they hear you're a tout?
Yeah, I think there is a more of a general sense that they would rather take their risks in a bond market with the risk-free security yielding, at least at the bill side, 5%, as opposed to going and buying stocks that are trading at 20 times earnings, that have an earnings yield of 4%.
That's great advice. Next, Jason Trennert on categories and stocks to keep an eye on.